So we'll be talking about potash. It's a little bit of a switch from critical minerals to even more important things, fertilizers. So we started with our Gabon project about a year and a half ago. This is probably going to be one of the largest deposits in the world. We've already drilled it in the last 18 months or so. We put out a PEA. I'll talk about the details as well. Briefly about our team. Our team has been together for almost 18 years. That's rare in this business. You can see some of the deals that we've done in the public domain. This is our actual third potash project. We've built and sold a project in Saskatchewan, a company called Potash One. A German company called K+S bought it, and they built it using solution mining operation. I'll talk about that as well. Alana Potash in Ethiopia, and most recently, another Millennial, that was Millennial Lithium, a lithium project in Argentina. So the same team, the same potash-oriented board and management team. We have some strong members here. For example, former Senior VP of Production at Nutrien, which used to be called Potash Corporation of Saskatchewan, is our director. He's been with us for quite a few years. Mark Stouffer, another prominent person in the potash industry, is also on our board as well. So a little bit about Gabon. Now, most of you guys know a lot more about Gabon than folks in North America, but again, it's oil and gas country, a relatively small population, about 1.5 million people. On a GDP per capita basis, it is actually the wealthiest country on the continental part of Africa. A few years back, they decided to diversify away from oil and gas. They opened their mining sector, so quite a few large players are there. We're talking about manganese, actually. Eramet out of France has one of the largest manganese production centers there. Fortescue has a large iron ore project, and there are quite a few exploration plays as well. So what we like about this project, and this is our model in general, we want to get involved with projects that have been explored in the past. So we don't get involved with binary situations, most pastures or proximity plays and so forth. This project has seen 2 exploration programs in the last few decades. The most recent one was in 2017, 2018. It was specifically for potash exploration. On all these 3 holes that you can see on the map actually hit potash. So we could see that there's a significant potash upside here, or potential. The distance between those 2 drill campaign clusters is about 20 kilometers. And this is basically the same potash basin that extends from the Republic of Congo into Gabon. So we like this project. We got now we got control of that project in the last 18 months or so, and we started drilling. So what we did, we actually extended the existing historical drill holes that was cheaper, much easier access, etc. And those 2 drill holes covering less than 1% of our property, and the property is quite large, 1.7 billion. 1,200 square kilometers, we have come up with 1.7 billion tons of indicated and inferred resource. And we think that, upside just in that part of the project, which is again probably going to be about 5-7% of the entire property, is going to be probably double or triple that. But in entirety, of this southern part of the project, we think it's going to be probably 10 times that. Now, what is important about this project is not just the size, but also the thickness of potash deposit. So we're talking about 70 meters at the thinnest part of the deposit. To put that in perspective, if you look at largest potash basins in the world, which will be in Saskatchewan or in the Urals in Russia, if you get to 20, 25 meters, you're ecstatic. Here, 70 meters already at the thinnest part, which is the northern part. As we move to the south, it actually slopes, and then we get almost double that, so basically 140, 150 meters of thickness. Now, that translates into much better economics, as you can imagine. We will be using solution mining, I'll talk about momentarily, but we did a PEA, and again, this is our typical approach. As soon as we do the initial drilling, we want to see how viable the project is economically. So we did a PEA based on 800,000 ton a year operation, and you can see again the numbers. I'll show you the comp tables. They're stellar in terms of the CapEx requirements, in terms of OPEX, in terms of IRR and NPV. Again, the NPV of $1 billion, we're currently trading at around 1% of that NPV. And OPEX is one of the lowest in the world. If you look at these 2 comp tables, on the right side, you will see the OPEX. So the first 3 companies right after MLP, Uralkali, Nutrien, and Belaruskali, those are the largest potash producers. They also happen to be the lowest cost producers. So we compare favorably even to those guys because of very thick potash and because of solution mining operations. The same thing on capital intensity per ton of MOP. MOP stands for muriate of potash, so this is a standard potash product. And we have a pretty good selection of different development projects there from all over the world. You know, Highfield is from Spain, Cola is from our neighboring Republic of Congo, Western Gensors are in Saskatchewan, and Brazil Potash, of course, out of Brazil. So some of these projects are aiming for much larger scale to start with. For example, Brazil Potash is shooting for 2 million tons to start with. That means that, you know, they should benefit from the economies of scale. But even with 800,000 ton a year operation, would beat them at the capital intensity per ton. So that's why we think this is going to be one of the most viable potash projects out there. Now, we are going to solution mining. Solution mining is well-proven process or methodology. There are 3 major solution mining operations in Canada and Saskatchewan, including the project that was sold to a German company. They actually built that project. They produced 2.2 million tons of potash using solution mining. There's another solution mine in Germany. The reason we like it is pretty straightforward. It has 2 major advantages. It keeps your CapEx, sustaining CapEx and OpEx low, and it has a minimal environmental impact. So, because literally we do not move earth here. So we don't excavate, we don't sink a shaft or anything like that. Literally you drill into your ore body, you pump saline solution or sometimes even fresh water, you dissolve potash underground, brine comes back up to the surface, you go through processing. And we have all the elements for successful solution mining, meaning thick potash, we have water availability, we're right on the coast, we can actually use salt water, meaning seawater, we also have fresh water on site, and we have cheap gas. Now, a few pictures just to show you what it looks like on site there. Now, you see that red core, so drill core, when it's red, that's good for any of you guys who know potash. When you see red, you get excited because that means that there's a lot of potash there. Of course, we send it to a lab for analysis as well. Now, a few words about the potash world, what's happening right now. It is still supply driven. So basically 3 countries, Canada, specifically the province of Saskatchewan, Russia, and Belarus, provide 70% of the world's potash supply. So they control the market. And there is, of course, some production coming out of Western China, which is obviously consumed in China, out of Germany, out of the Middle East, a little bit out of Chile, and so forth. But those are the 3 massive producers. Now, in terms of pricing, well, before pricing, maybe in terms of demand, the largest importer is Brazil, 13 million tons a year. The largest user of potash is China, but it's not the largest importer. They still import 10 million tons, but they produce domestically about 5-6 million tons. And then, of course, US, 10 million tons a year. Most of it comes from Canada. We'll see what happens after the tariffs. And then India, about 4 or 5 million tons a year. Now, in terms of pricing, again, as you can imagine, largest markets such as India and China, they pay least amount, so they pay around $300 per ton. Brazil pays around $315 right now, US about $340, $350. Europeans also pay about 350 euros per ton. Now, what is interesting about Africa is that it consumes about 2 million tons a year. All of it is imported, and the pricing is actually higher there. We've been talking to some fertilizer distributors, and they said that last year they did not sell a single ton of potash for less than $400 per ton. Now, the reason for that is simple. The African countries buying in smaller batches, so they end up paying a higher price. Our objective is to place as much of our product as possible in Africa for obvious reasons. We're there. We want to be first African potash production for African agriculture. And it makes a lot of sense for us because it will be less competitive compared to, let's say, to Brazil or India or China, where all the majors will be competing, of course, for a larger market share. Now, the company's plans are pretty simple. This is exactly the model that we have used, I should say, in all our previous projects. Basically initial drilling, followed by a PEA, then further drilling, and then as soon as we see that there is enough material to go forward, we embark on a feasibility study. So this is definitive, a bankable feasibility study, which we're planning to start later this year. So we just raised enough funding late last year to allow us to do second stage of drilling. We'll drill 2 more holes to expand our resource. We think the resource is so continuous and consistent and thick that those 2 drill holes will allow us to double our current resource. And that will be sufficient for us to proceed with bankable feasibility study, hopefully by the middle of the year. At the same time, we'll start environmental studies. So basically those 2 programs will run concurrently with each other, and we're hoping that we'll be able to complete both of them probably by the end of the first quarter next year. In terms of our Share structure, so it's pretty tightly held. We still own 30% of the company. We meaning the board and the management. We got a couple of very large family offices out of the Far East and the Middle East. They own cumulatively probably about 35% of the stock. Then a handful of funds out of Toronto and London, they own another 10, 15%. So the plan for us, again, is to raise a bit more capital later on this year, specifically earmarked for a feasibility study, and then take it all the way to pre-production or pre-construction stage. So I will stop there. I think I still have 5 minutes. If you have any questions, by all means. If not, we'll be happy to see you guys in N1 at Millennial Potash.